You are watching Burr Cashflow Investors. So if you're not a member, Burr Cashflow Investors, make sure you become a member. And today we are talking about the flipping markets. What are the upcoming flipping markets and what are the ones that are making sense? So having said that, if you are a member of Burr Cashflow Investors, make sure that if you're not a member, become a member, invite your friends, invite your family, and join the group every single week, 3 times a week. We do a live, and the whole idea of the live is to talk about what is relevant, what is going on in the market, and to be able to learn and how do we implement it. Today, specifically, we're talking about the best flipping markets, and we're going to look at some statistics. We're going to look at some numbers as to what is going on in the market. So as we talk about this, the way we're going to do this is we're going to, number one, talk about why is this relevant or why should I care, right? Andrew, why should I care what the top flipping markets are? Number two, we're going to talk about the data, meaning we're going to give you the data so that you can find the best deals in those top flipping markets. Imagine having that particular data. And then the third part of it is, okay, how do I actually, excuse me, how do I actually put this to use, right? How do I actually use this particular thing so that how do I actually make money with it? So we're going to do it in 3 pieces. Today, we're going to talk about why is this data relevant and what are the cities, what are the towns, what is going on in the market. And we're not going to look at what has happened, meaning a lot of times whenever people look at the flip markets, they look at, okay, what markets made money? But if you look at the markets that made money, that would be last year's data. What we have to look at is what markets are going to make money. So instead of past pacing, we need to do future pacing, right? Meaning, is the data relevant? Where am I going to find the best deals relevant to the data that we're looking at, which is the upcoming data? And then how do I actually find those particular properties that will have the best numbers, and then how do I actually implement it in place? So it's kind of we have to look at it from a place of how is this relevant, what is exact data, and then how do I make use of data to make money? So having said that, we'll get started. So first, we're going to kind of talk about why are we talking about the top flipping markets. So obviously, whenever you're doing real estate, you're either looking at a flip, you're looking at either a wholesale, or you're going to basically hold the property in some format of either a long-term rental, a mid-term rental, or or an Airbnb. Right? As we have said, midterm and Airbnb today are extremely, extremely profitable, right? And so you have to pay attention as to where I'm going to make the most amount of money. Am I going to make the most amount of money flipping a property? Am I going to make the most amount of money doing a midterm or a short term? Or if the town doesn't allow it, do they allow to do a rental property? So I mean, those are things that we have to consider whenever we look at some of this data. So let's kind of jump right into it from the beginning. So in terms of, if we look at the change from 2021 to what happened in 2022, now mind you, that some of this data is going to be a little bit different than you would expect, because what you would expect is that, hey, I'm hearing the market prices are dropping, which is the truth. I'm hearing that I can find more inventory in the market. That is the truth, right? And if you look at the MLS properties that are hitting the market, they're getting lower and lower and lower. But having said that, whenever you look at, people say, well, numbers don't lie. No, they do lie depending on how do you read them. Meaning, do you really understand how to read numbers? Because I can show you numbers where it says, oh my God, the market hasn't moved. And I can show you numbers where there are a lot of price reductions. There are properties that the upcoming properties, especially the properties that need some work, those properties are being bought for a bigger discount. So what is happening is this, that hey, Joe, if you could do me a favor, man, if you can just turn it this way. I said I wouldn't, but I want to just really quickly show this before I get into the actual numbers. So what happens is something like this, right? When the market is in an uptick like that, this is kind of how a market is, right? Today, we are kind of somewhere here, right? So the market prices go up and they go down. Now, what happens is this, when the market is down here, right? What's going to happen is the properties, distressed properties, you're going to be able to buy it at a wide margin. As the market goes up, this line narrows, meaning what's happening? More and more and more investors are coming into the marketplace. So what happens is the amount of discount that is available in the market starts dropping. This is your retail price. This is your wholesale price, meaning as an investor, I need to buy these properties at a discount. And what that means is this: you can't be just buying a property for a 20% discount, because if you bought a property for 20% discount only, there is not enough margin. What I'm saying is this, that if an average property, let's just say in the marketplace, is selling for, let's say $170,000, $180,000, right? And you buy a property at 110. If you buy the property at 110 and the average property in pretty decent condition, pretty good condition, selling at 180, and you buy the property at 110, you're not going to have enough margin, because to fix up a house that is 850 square feet to 1150 square feet, how much is going to cost you today in an average market? Average, it's going to cost you about $35,000 to $40,000. So now you bought the property for, say, $112,000, $114,000, effectively 115 plus 40. You're already at 155. By the time you add the carrying costs, by the time you add commissions, sales costs, all that kind of stuff, you have no margin left. So what that means is this, that whenever the market is down, you get a lot deeper discount, right? As the market starts rising, more and more and more people start jumping into real estate, the competition becomes higher. What starts happening is the bandwidth of the delta between the sale and the buy starts narrowing. The reason it starts narrowing is because there's a lot more competition. That's what happened last couple of years. Now what is happening is this, that the prices, even though this is what everybody would want you to see, this is not quite what's happening. What's happening is the retail price is still staying, right? You'd want to see it like this. Still, the retail price, if you really look at the numbers, is kind of more like this, right? But what's happening is the gap between retail versus, this is supposed to be black, so let me make it black, versus the wholesale pricing, this gap is increasing. Each passing day, this gap is increasing. And when this gap increases, what it starts happening is you start finding properties for bigger and bigger discount. Now, why is this gap increasing? Think about this, right? The reason why it's increasing is interest rates jacked up. So now properties that need, if you don't have any kitchen, you don't have a toilet in the property, right? So basically the property can't be bought by first-time home buyers. A lot of the amateur people who were doing flips, they got scared, right? Or even new flippers, they get scared when the market turns. So they pull back. When they pull back, the demand today for properties that are completely fixed up, that demand necessarily hasn't gone down, right? Because there's still too much demand. Now, less people can qualify. So of course, the market has cooled down a little bit. But the market for properties that need work, that market has gone much softer than properties that are in good condition. And this data that we're going to go through will reflect that. So let's go over on this side again. And this data will reflect that, and you'll see what I'm talking about as to what has happened. So first we're going to look at counties, then we're going to look at cities, and then we're going to look at the city of Chicago, right? So, and this is general trends we're talking about. So don't get very specific about this. So if we look at Cook County, right? Sales data, this is number of sales. So number of sales in Cook County were 16% less. In DeKalb County, 15% less. In DuPage County, 24% less. Kane County, 24%. Lake County, 23%. McHenry, 19%. Will, 19%, right? So if we look at the general data, as far as I'm concerned, and we're looking at a county basis. Now, remember, when I compare DuPage County or Will County, that doesn't have a major metropolitan city in it, which is the city of Chicago. So Cook County data, basically city of Chicago data versus suburbs, right? It may as well be two different worlds. And in Cook County, it's very unique that you have some D and C minus and D sectors, right? Markets that are C minus and D. And then you have obviously A and B markets in Cook County. But that disparity generally in most counties does not exist, right? That wide disparity does not exist. In Cook County, you'll find some properties in some of the zip codes and some of the neighborhoods that are really hit. And then you find nice houses that are selling like hotcakes. So that disparity is very great in Cook County data. So when you look at county-related data, especially for Cook County, this becomes important for all of us to understand. Now, if we look at percentage of original price versus price reductions received, right? If we look at Cook County, it's 98.4%. That's pretty damn strong, right? Generally, in a normal market, it's about 96, 97%, right? I mean, maybe somewhere 94%. So right now, that data is exceptionally strong. If we look at DeKalb County, it's 99.3, meaning from original list price to what prices people received. Now, mind you, what are the major amount of sales in a multiple listing service? They're retail sales, right? Relative amount of distressed sales is low, and I'm going to go into that step by step as we get into it. Now, if we look at, let's say, Kane County, even last year, even with the interest rate going up, right? The sale, original list price versus the price that people got, that was 100.2. What does that mean? That majority of the year, even with interest rates going up, right? On this data, this is fourth quarter data coming into fifth, because this quarter, month of January hasn't rolled in yet, right? It's not going to get reflected yet. So this is something important to keep in mind on, that in Kane County, it was 100.2. That means a lot of properties were selling above list. Right? Now, mind you, it's going to have a mixture of data, earlier part of 21, and later part of 21, but just something to think about. If we look at Lake County, 99.2, again, the same numbers. If we look at McHenry, 99.5, right? So if you look at, say, something like McHenry County, you would think it's an outer line county for Chicago. Generally, that data, you should see more price reductions. Relative to the sales, it's not. Right? And this is something interesting. Will County, 100.1, right? 100.1. So that means that there were that many more properties, that were that many price reductions were not common in Will County. They were not common, certainly, in Kane County. So those markets have been exceptionally strong. Just something to think about. Now, if we look at in terms of change, meaning number of properties sold versus number of properties sold this year. So basically last year versus in end of 2021 going into 2022, right? So where are the markets where there is a big number change, right? So the big number change, the first one on my list is, and mind you, most of these are going to be 30% or more. Now, some areas, it was 15%, 20%, or some town is very small. Relatively, I'm leaving those out, but because this is a huge list, Chicago and surrounding areas are huge areas, right? That's why I'm kind of going through that particular list. So if we look at Bartlett as an example, Bartlett was 30.1%, right? Less number of sales. Barrington was 31.5%, less number of sales. If I look at Bensonville, also had 31.6. Now, here's what's interesting, right? If you look at Barrington versus Bartlett, what are we looking for? We're looking for where are the market where we can start finding deals, right? If you look at Barrington, what is the inventory that is distressed inventory? In both Barrington as well as Bartlett, it's about 1.6% of the inventory is distressed inventory. Versus if I look at Bensonville, right? If I look at Bensonville, it's 6% of the inventory was distressed inventory. Something to pay attention to. So what does that mean? That Bensonville, I'm going to add to my list where I'm going to keep a special eye on, because I'm going to find some wide disparities and more properties that are going to pop up. The next one is Blue Island, right? So I'm just basically going down the MLS list of properties. So but obviously a bunch of them I skipped. The next one is 6.8%. And that's Blue Island. Blue Island had gone through the roof. And now you're seeing some distressed inventory show up over there. The next one, which should be obvious, is Calumet City, right? This is a market that, Blue Island is a market because of Mastery went through the roof, right? Calumet City is a market where a lot of people from Mastery started buying properties, right? I mean, that accounts for 18,000 plus properties in Chicago, especially when we talk about either flips or we talk about specially rental properties. But there are a bunch of pockets in Calumet City that have some challenges, right? That are not quite B minus to C plus pockets. And those pockets, you're seeing more and more distress inventory coming up. So Calumet City is one of those. The other one that I was kind of looking at where there is a higher inventory and the number of homes sold was kind of interesting was Country Club Hills. Now, Country Club Hills would be an area where you can obviously see that. Why? Because disparagingly, some of the pockets, some of the houses, the taxes are really, really high, right? And some of them, so you'll have a house next here, which will be 5,000. The house next to it, taxes are 9,000, right? And what that does is that creates a huge disparity. So that's just something to think about as to why that has happened. Another area which should be paid attention to, and this is something I've been talking about a long time, not long time, in the last couple of 2-3 months, I should say, and that is Dalton. In Dalton, 9% of the inventory was distressed inventory. So what's happening? An area like Dalton, an area like Country Club Hills, an area like Blue Island, these are areas had gone up tremendously, and they're taking a tremendous hit as the property prices are coming down because there is more distressed sales that are showing up in those areas. So now, would you say, well, that's an area I should be buying because there is more distress showing up? No, that is not necessarily what I'm saying is that is not necessarily the areas where you should be buying. You should be keeping an eye out. So if you're flipping a property, if you have properties that are stuck there, either go ahead and pivot and send them into a long-term rentals, right? Make sure, so get it as a long-term rental, rent it out. If you look at housing voucher in some of the areas like Dalton, they pay a lot of money for property, especially if you have a little bit bigger property, 3-4 bedroom property, they pay a lot of money. So if you're not able to sell those, pivot quickly before more and more properties hit the market so that you can get it rented, get past this whole issue, and then a couple of years from now, you can go ahead and sell the property at that point. The next one is going to be Hazel Crest. For anybody that's been paying attention, we obviously already pointed this out in Mastery a couple of days ago. If you're in Hazel Crest, at this point, you're not going to be able to do any new rentals, meaning if you have existing rental, that's grandfathered in, so you're good. But any new rentals, you're not going to be able to do in Hazel Crest because for 6 months at least, they have put a moratorium on any new rentals. So if you have a property under contract that you're going to buy, it better only be for a flip because it's not going to be for a rental. Challenge with Hazel Crest is market has been exceptionally strong, right? The market has been exceptionally strong in Hazel Crest. And this is similar sort of a thing for Harvey, right? It's kind of interesting. Even in Harvey, the market went up, but yet the amount of distress in the market is definitely going up. So the next thing is property prices are going to correct. The next one was Hillside. Hillside is a very, very small town. So really the number is right around 5.5%. So it's not as high, but it's certainly there. The next one is Markham, right? Markham was the next one where you're seeing a lot of distress, close to 9% distress. 1% or so around that number is normal. Now, if you're in a C area or a D area, you're going to have a little bit higher amount of distress, but suddenly this is a huge uptick, right? This is a huge uptick compared to rest of the areas. So just something to pay attention to. Next one is Matson. Matson market had been exceptionally strong, right? Matson generally pre-COVID, it was a market which was a slow selling market. Now, Matson, we're seeing more distressed properties, about 7% distressed properties that are showing up in Matson. The next one is Maywood. This should not be a surprise. Maywood has been fairly strong, right? Fairly strong. And the numbers did not drop. The number of sales, even in Maywood and in Matson, did not drop because they have reasonable, I said reasonable, I didn't say cheap, I said reasonable priced housing. And that's why the market has kept pretty strong. The next one is this one should be obvious, and this one is Richton Park. If you notice, these are all areas that basically suddenly when the market had jumped, they had gone through the roof, and now they're starting to pull back, and they're pulling back fairly heavily. Round Lake is also another one of those areas that is being affected big time. A lot of investors jumped into Sauk Village, right? Sauk Village is an area that all this time has been beat up quite a bit. It's been beat up quite a bit. And now, again, the prices have again started, they're going to start correcting because the amount of distress that's showing up over there is relatively higher, close to about 7%, right? Then you have, now we move into Chicago, right? So these are the areas that if I'm going to do flips, right, these particular areas, I'm going to watch for because my back-end numbers are going to come down. And my back-end numbers, if you look at Calumet City, this is happening. If you look at Dalton, this is happening. Harvey, obviously, this is happening. These are all pockets where you have to be exceptionally tight in terms of your numbers, right? If you're especially doing that. And the reason I'm pointing some of these areas out, because there's a lot of investors that have properties sitting on this because these areas were exceptionally hot. So just something to think about. Right now, mind you, I didn't mention, like I had mentioned before, South Holland has been exceptionally strong, right? 4 or 5 years. People love that area for some reason. I don't know why, but they seem to love that area. That area, even though there are huge price reductions on properties that are not fixed up, and this is something we're going to have to watch. Any area where you have an abnormally larger number of people that are buying FHA deals, right? If it's an FHA buyer, so you have basically 3.5% down buyer, those buyers are going to be affected the most. So because those guys are going to be affected the most, what properties are they going to buy? If the property is superb in terms of the rehab, if the property is priced fairly, and if it's on the market, it's going to sell. Right? Because the market is that strong even today. We saw a little bit of a, the rates pulled back a little bit in the last few days. Guess what happened? Boom, any inventory that was available was gone, right? And we're seeing that happen because still the demand in the market is exceptionally strong, which is, you wouldn't think it should happen, but this is what it is right now. This is where the demand is. In the city of Chicago, if we look at it, right, the area that is pulling back is going to be Auburn Gresham, right? Auburn Gresham is an area. Now, mind you, prices went up, but the amount of distress inventory that is coming up in that area also went up quite a bit, somewhere around 8.2%, right? Austin, 7.9%. Avalon Park, this was a surprise to me. It was Avalon Park, 9.3% is the amount of distress inventory that came on. Burnside, I don't know the Burnside area, but the numbers are somewhere around 8%. Calumet Heights, it's about 7%. Calumet Heights is kind of rather interesting area, and it's become hot lately, but it's got some pockets that are rather interesting. Let's just put it that way. Chatham is about 9.5%. So Chatham is a little bit on the higher end of the scale. The other part of it is Inglewood. Obviously, Inglewood had been hotter than hot. Right? I mean, it was just exceptionally hot. And today you have close to 15% distress in Inglewood, right? So obviously, traditionally, Inglewood has had some challenges. And now, again, the numbers are showing based on the stats that it's, again, turning back because obviously that area, but still the prices in that area have gone through the roof, right? Just because, again, there's distress showing up, that does not mean that it may be reflected in prices. I mean, we saw a straight rise last 5-6 years in Inglewood prices in general. So the next one is going to be Gage Park, about 8% or so. Next one is Greater Grand Crossing. Greater Grand Crossing was an interesting area, right? And about 11 to 12%, similar numbers closer to Inglewood distress. Then it's Montclair and Morgan Park. That's going to be somewhere around 8%. South Chicago is the next area at about 15% distress, right? So South Chicago, even though sales were strong, right? Sales were strong, but these are the distress numbers show that that is going to be, if you're doing a flip in that area and it's not done really, really well, you may have a lot of, price, a lot of people that their contracts may fall through because again, this is going to be another example of an area where you're going to have a large amount of 3.5% FHA type of buyers. Then you have South Shore. South Shore was exceptionally strong. If you look at the number of sales, it was exceptionally strong. But when we look at the upcoming distress, right, which is going to be the future indicator, that's somewhere around 14 to 15%, similar to what we look at South Chicago. The next one is Washington Park. Washington Park, I always get Washington. There's two Washingtons. One is Washington Park, and then there's another, I think Washington Heights, I believe. I always get the two of them mixed up. One is a little bit east. The other one is just a little bit farther west of it. And those two, for some reason, I always seem to get those two confused. Oh, Washington Heights and Washington Park. So Washington Heights did this is interesting, right? The numbers in Washington Heights in terms of the price change was not that much. The number of sales in Washington Heights fell by about 12%, but the area as such in terms of the number of distress is somewhere around 8 to 9%. Whereas if we look at Washington Park, it's 0% change in terms of number of sales. But yet, if you look at the number of distress, upcoming inventory distress, that is closer to 10%, right? Which is rather interesting. And now, mind you, we only have figures from October, November, December, and Jan going into it. So we'll see that change after the February reporting or so. That's when we'll probably start seeing a little bit bigger change. The next one is West Pullman. West Pullman was somewhere around 10 to 11% in terms of your change. So that's kind of where it is. Now, if we look at as far as some of the counties that had the strongest numbers, right? The strongest numbers in terms of in terms of the price. The number one price, the counties that had the highest amount of appreciation, even last year in 2022, with the interest rate going up, number one of them was DeKalb County, right? Now, is that because it will have a little bit better pricing in DeKalb County compared to other counties? Because the average price in Cook County was $305. The average price in DeKalb County was $230, right? Which both of them, Cook County prices went up, so did in DeKalb County. But just as a comparison, in Cook County, for the year, the prices were up by 1.7%. In DeKalb County, the prices went up by 15%, right? So a significant difference. And you would think that DeKalb County is an outer-lying county, so you shouldn't have as much price appreciation. But does that mean that people were kind of flocking more towards the outer suburbs? I don't know. But that's what seems like it and plus, you have more affordable housing. That's going to make a difference. DuPage County was somewhere around 7%. Kane County was 10%. Lake County, 5.3%. And Will County at 8.3%. So what my point with all of this is that we need to look at what is the data that is going forward. So from now, going into this year, right, if you are flipping properties in any of these areas that we pointed out, right, watch out for your numbers, because this is something that you have to pay attention to. That if you don't have the flip done exceptionally well, in some of these pockets, you're going to have a hard time. That does not mean that demand is not there. There is demand, and we continue to see robust demand. in areas. But if the properties are not fixed just so, especially as an investor, there are certainly areas where properties have started sitting longer and longer on the market, and people are having to do some price reductions. Like, this is something that we're seeing. This is the reality. And basically, in that way, things are slowing down. But resales in general, if the property is in good condition, they're selling. I mean, they're selling like hotcakes still. Right? So there's no bad news, but certainly there is a difference in the news. So what does this mean? So now, how do you get the data? So if you want the data tomorrow, if you're on the RIA meeting, if you're here in person at the office, great, good for you. We will give you all the properties that I think that makes sense in some of the more attractive areas where you should be looking to do the flip. As you noticed last year, right? If you look at my personal portfolio, I think I have right now probably about 8 properties that I'm buying in the process of, they're going to close within the next couple of weeks. There's about 15 or 20 that are under rehab, right? Being added to the portfolio of properties that I'm keeping. One of them I'm forced to sell because it's in South Holland. They won't let me do a rental on it. So I have to sell that property as a flip. Too bad, but it is what it is, right? Most of the other ones either are going to midterm rentals, short-term rentals, or obviously our good old long-term rentals, right? But I switched my complete approach from buying B markets. Solid B markets is what I've been buying since 2011, and just keeping all those properties, to completely into A markets. So from the Schaumburgs, the Park Ridges, the Morton Groves, the Wheelings, all the areas that are good A markets. Of course, you're not going to buy in, Lake Forest, but you can certainly pick up properties that are really, really solid in good markets, because I can do a lot of midterm rentals being 30 days plus. So tomorrow, we're going to put out that list. So if you are attending the meeting, which we have tomorrow, then you will get that list, which is going to be the list of the properties that have distress today. And why is that list? Because what we're working today is the list of properties that are either short sales, right? That's the number one thing I would look at today, be it in the MLS, be it outside the MLS, that's fine, right? And we're looking at the properties that are now going to foreclosure. Like the number of properties that were going to auction, that number has ticked up by about 25%. It's not through the roof yet, right? We were expecting a few more properties to be released. That number is not through the roof yet. But there's certainly about 10,800 properties that are pending foreclosure. Right? They haven't gone to auction yet, but pending for, and that number has been gradually growing, and the judges are pushing them through to auction, because now the excuse of, oh my God, it's Corona, that excuse is no longer viable. So that's what's going on. So tomorrow, if you're attending the meeting online, or if you're attending the meeting in person, right, you will get that list as long as you are registered and going to the 3-day event. Just as a reminder to everybody, the 3-day event is 24th, 25th, and 26th of this month, which is, well, not this month, I should say. In another day, it will be February 24th, 25th, and 26th. If you're not a member of Burke Cashflow Investors, make sure you become a member, because at the 3-day, we will give out the drawing to one of the members of Burke Cashflow Investors. If you invited a bunch of your friends, then your odds will go up, because for every one friend that you invite that is a part of the community, part of the group, you get one extra chance to win. And this time the prize is a cruise for 2, you and your spouse. And so we're going to draw one person name out of the hat. So invite your friends, invite your family. Hopefully some of these numbers make some sense to you. And again, remember, the sponsor for today's live event is Larry Brzezinski from Finance America for all your financing needs. He's doing, I know, a whole bunch of refi loans for me as we speak. Having said that, thanks a bunch, guys. We'll talk to you tomorrow. Make sure you're on the RIA meeting, and make sure you register for 3-day so we can give you the list of properties that we're working. So tomorrow you should get a list of about 3,200 or so properties that have the highest potential, that have the best numbers in terms of going after those properties. So having said that, thanks a bunch and have a good day.